Indian Economy Series 4 Snapshot of RBI Part 1 Reserve Bank of India. How was it formed? The Reserve Bank of India was established on April 1, 1935 in accordance with the provisions of the Reserve Bank of India Act 1934. The central office of the Reserve Bank was initially established in Calcutta but was permanently moved to Mumbai in 1937. The central office is where the governor sits and where policies are formulated. Though originally privately owned since nationalization in 1949, the Reserve Bank is fully owned by the Government of India. What does the preamble of the RBI say? The preamble of the Reserve Bank of India describes the basic functions of the Reserve Bank as to regulate the issues of banknotes and keeping of reserves with a view to securing monetary stability in India and generally to operate the currency and credit systems of the country to its advantage. To have a modern monetary policy framework to meet the challenge of an increasingly complex economy, to maintain price stability while keeping in mind the objective of growth. What is the structure of RBI? The Reserve Bank's affairs are governed by a central board of directors. The board is appointed by the Government of India in keeping with the Reserve Bank of India Act. The directors are appointed or nominated for a period of 4 years. What does RBI constitute? Official directors, central board of directors, full-time, governor and not more than 4 deputy governors. Shri Shaktikanta Das is the present governor of RBI. Non-official directors nominated by government, 10 directors from various fields and 2 government officials. Others, 4 directors, 1 each from 4 local boards, regional. What are the main functions of the RBI? Monetary authority. It implements and monitors the monetary policy and ensures price stability while keeping in mind the objective of growth. An amendment to RBI Act 1934 was made in May 2016, providing the statutory basis for the implementation of the flexible inflation targeting framework. Section 45ZB of the amended RBI Act 1934 also provides for an empowered 6-member monetary policy committee to be constituted by the central government by notification in the official gazette. Monetary Policy Committee. It was created in 2016. It was created to bring transparency and accountability in deciding monetary policy. MPC determines the policy interest rate required to achieve the inflation target. Committee comprises 6 members where Governor RBI acts as an ex officio chairman. 3 members are from RBI and 3 are selected by the government. Inflation target is to be set once every 5 years. It is set by the Government of India in consultation with the Reserve Bank. Current inflation target is pegged at 4% with -2 or +2 tolerances till March 31st, 2021. Regulator and supervisor of the financial system. Prescribes broad parameters of banking operations within which the country's banking and financial system functions, such as issuing licenses, branch expansion, liquidity of assets, amalgamation of banks, etc. Objective: maintain public confidence in the system, protect depositors' interest and provide cost-effective bank services such as commercial banking, cooperative banking to the public. Manager of foreign exchange. Manage the foreign exchange reserves of India. It facilitates external trade and payment and promotes orderly development and maintenance of foreign exchange market in India. It also maintains the external value of rupee. Issuer of currency. Issues and exchange or destroys currency and coins not fit for circulation. Objective: to give the public adequate quantities of supplies of currency notes and coins and in good quality. Developmental role: performs a wide range of promotional functions to support national objectives such as making institutional arrangements for rural or agricultural finance. Commercial banks lend loan to small-scale industrial units as per the directives priority sector lending issued by the Reserve Bank of India from time to time. Financial inclusion. The Reserve Bank has selected a bank-led model for financial inclusion in India. RBI has undertaken a series of policy measures. Some of the important ones are: no frills accounts, account either with nil or very low minimal balance, as well as charges that would make such accounts accessible to vast sections of population. Use of technology. Devices such as ATMs, handheld devices to identify user accounts through a card and biometric identifier, deposit-taking machines and internet banking and mobile banking facility to provide the banking services to all sections of society with more ease. Related functions. Banker to the government perform merchants' banking functions for the central and the state governments. It is entrusted to the central government's money, remittances, exchange and manages its public debt as well. Banker to banks maintains banking accounts of all scheduled banks. It also acts as a lender of last resort by providing funds to the banks.